Good morning, everyone. Thanks for joining us this morning. We're going to be discussing stretch contracts, both qualified and non-qualified opportunities we have here through IMS. Do appreciate you joining us here on a Thursday. Again, this is Matt Tour. I'm a annuity marketing specialist here at IMS. Been here for many years. Seen a lot of changes over the years, and some good, some bad. But right now, we're in a very good time period with really strong interest rates on fixed rates. We also have very strong cap rates, very high income payouts based on these lifetime income products. So a great time to be in the annuity business. I know we've seen a huge increase in premium coming in the last couple of years based on the very high interest rate environment. Probably made it through that 20 plus years of low rates, got back to a little better interest rate environment, which definitely helps the annuity cause. So definitely a great time to be in this field and working that annuity side of the market. So we do continue to offer our new producer builders, great ways for you to earn additional incentives based on your production the first 180 days of being licensed through IMS. We have levels between $1 million and 100,000, lots of different items you can choose from, including seminar systems, radio programs, trips, cash, iPads, a lot of good stuff you can qualify for through IMS. So definitely a nice incentive to write business through IMS in your first 180 days, and we'll definitely help you out with some of your needs moving forward. So we do also have a referral program. You refer agents to IMS, you get a nice little bump based on their production. 20 basis point override based on index annuity premium, 10 basis points based on MIGAs. You also get a $50 upfront bonus when they get contracted. And then we do send these checks out about once a quarter. So you'll get a quarterly check. I always have agents calling me to verify when those checks are going out. And we have agents that receive thousands of dollars based on the referrals. So definitely a good way to build up some additional income on your end. We also have our market reimbursement program, reimburse $100 for every $100,000 of indexed annuity premium. Put that in a side account. And then when you send in receipts based on your advertising costs, we'll go ahead and reimburse half of that expense. So if you send in a $1,000 bill, we'll reimburse $500 of that. So great way for IMS to help you out with some of your advertising costs. I know the cost of doing production anymore has gone way up with everything else. So good way for us to help with some of those additional costs. We have a great back office support team here at IMS, a great new business team, a great creative team, a great group of marketers, a lot of good people here that can help you with your business. I know we have a great new business squad that helps from day one, getting the business input into our system, send on to the home office. They'll review it for you. I know with applications being in the 40 to 60 page length, there's always things that are missing, so they'll help you out with that. And then, of course, a lot of people do use e-apps right now, which helps get you around some of these shortcomings based on doing paper apps, and definitely a much smoother process by utilizing the Firelight e-app system. We also have our website, www.imsinc.com. We have a lot of really valuable tools on there. We have an income comparison program. You can utilize our annuity rate watch system. You can look up the best interest rates based on pretty much any situation. Maybe you're looking for a 88-year-old in Utah who has the best 5-year rate. You can plug that information up and it's going to show you the best 5-year rate based on that individual. We also have index annuities on this system. You can look up the best cap rates, the best S&P caps, the best fixed interest rates within the indexed annuity. A lot of great stuff you can pull up based on that site. We also have a lot of good industry links. Maybe we'll look up the AM Best rating on a specific carrier. You're able to do that. You can do term quotes. You can do long-term care quotes. You can look up the latest interest rates across the board on what's being offered in your state. Based on any duration, maybe look at the best 3-year rate or the best 10-year rate. You can pull all that information up. Really good place to go to pull up those details. As I mentioned, we do utilize Firelight as our main annuity e-app program. I know that iPipeline is more of a life insurance side, but we do have about half our applications coming in right now via e-apps. And once you kind of do it once or twice, you will not go back to doing paper apps because it's so much simpler. Really speeds up the underwriting process, speeds up everything. Turns a 6-week process into a 2-week process. So definitely a very good way to go by utilizing those e-applications. As I mentioned, we do have a great creative team here that can help you with advertising. Maybe you want to do mailings or do e-apps or do emails. They can also put together a social media campaign. Maybe you want to do some advertising on LinkedIn or Facebook or some of the social media platforms. They're more than happy to help you out with that. They can also develop a website for you or revamp a website based on your needs. I know they can also help with redoing your company logo, redoing your company colors. They can really get some good stuff moving forward based on that. We have a really good staff on the IAMS wealth management side. I know we've been doing the wealth management side here for about 5 years now, and really have seen a huge increase in assets on that end. I know that it's been a very, very successful business side to IAMS. And if you would like to get some additional information on the IAMS wealth management team and kind of what they can provide on that end, we've been more than happy to have Duncan Smith give you a call. Duck has been with us for a while, and they have a really good investment platform that clients can take advantage of that side. It's always good to have both securities and insurance handled for clients. That way you're not referring a client down the street and then you end up losing the client down the road because the other individual can do more than they can. So I think it's good to have both sides covered. And we have seen a huge increase in our top 40 agents getting licensed on the security side. 5-6 years ago, we maybe had 10% on the security side. Now it's more like 80%. So definitely worth your time on looking at getting a Series 65. I know that team can help you with that whole process. And I know that passing the 65 is not an easy task. We've had a number of agents not pass it for 2 or 3 times, but most of them do end up passing it, down the road. But definitely a good system to look at, utilizing the wealth management team and their ability to move assets and get them into, good locations. Definitely a positive for you and your clients. So I know it's always good to have that recurring income coming in via AUM, getting paid on a monthly basis, based on your block of business on that side, definitely helps the cause. So go ahead and get that closed up here and keep things moving along. We also do our life and annuity academies. We do about 3 of these a year now. I know we're having one coming up the beginning of June. It'll be our second one of the year, and probably do one more in the fall. But really a good program we put together. We probably bring in about 15 different speakers. We'll go over some great information on annuity sales ideas, life insurance systems, going over different software programs that you can utilize in the field. We'll have a number of lead providers that will be there, kind of going over their systems with you, see what kind of draws your interest. I know IRMA has been kind of a hot button here lately in the market space, kind of going over the ins and outs of IRMA. We have a educational system based on being a specialist in that field, so something you definitely want to take a look at. If you'd like to come out to one of our meetings, I know we've got one in early June that's pretty much sold out, but we'll do another one probably September-ish, maybe late August. But if you have interest in coming out to one of our meetings here down the road, mark off yes. I'd be glad to have you on board. I know we always see a nice spike of business from our attendees. If they attend one of our meetings, they pick up some great ideas on closing sales, getting in front of more clients. It definitely helps their cause, and it definitely helps their bottom line. So if you do have interest in coming out to one of the meetings, we also do a really good roundtable event where we have some of our top selling annuity specialists will be, up front, and you can ask them questions based on kind of what they're using in the field right now, what they're using to close more sales, really get some viable back feed based on what they do, to expand their business. So if that's something you have some interest in doing, mark off yes. We'll put you on the list. We'll definitely keep you informed when we do have our next meeting. Get that all put in place for you. But otherwise, if you do everything you do need, always feel free to give our marketing team a call. We'd be glad to help you out on that end and get things moving forward. I can do case design. We can do all kinds of good stuff for you based on that. I'm gonna go ahead and close that program there. We'll keep things moving forward on today's webinar. We also have presence on LinkedIn and Facebook. I know that some agents like to use these social media sites more than others, but we do have presence on both ends. We do some special advertising, special contests. We do through some of these platforms, and definitely take a look at what we have to offer there. We have a Facebook.com/IMS Inc. / on that end. Otherwise, LinkedIn, we have presence on that based on insurance-agency-marketing. Some really good stuff on that end of it. So stretch IRAs, I know we've seen a really big increase in these the last, couple, 3 years based on some of the new rules have come out, based on qualified monies. If a person passed away, post 2020, a beneficiary has the option of stretching that payment over a 10-year period. And depending if the client was currently taking RMDs or not taking RMDs, the kind of rules kind of just recently changed, and what the beneficiary has to do if a client passes away and they're currently taking RMDs, the beneficiary has to continue taking RMDs through that 10-year period, and they do have to take all the funds and transition them into a non-qualified status by the end of the 10th year post death of the client. So basically within 10 years, all those qualified funds have to be transitioned over to non-qualified funds. If the deceased was not taking RMDs, they're not 73, they're younger than that, the beneficiary also does not need to take money out every year. They can wait the 10 years and transition all the funds over in the 10th year. And that does help a lot because you have 10 years of growth compounding off larger numbers. I mean, you're going to end up with a larger number down the road, and that can really benefit your beneficiary with higher overall value at that time when they do transition those dollars into non-qualified funds. The only downside is you're taking that tax hit all at once in that 10th year, whereas if you stretch that out over the 10 years, you're taking tax hits along the way to really lessen the blow at the end. And that does help in a lot of situations there based on your client situation. So stretch IRAs are, I think, a really good way to go for clients that have, large amounts of money in IRA funds, or maybe they have a large growth in their non-qualified funds. The biggest difference on a non-qualified stretch versus a qualified stretch, non-qualified stretches you can still take out for the lifetime of the beneficiary. So if you have, say, a 50-year-old beneficiary that inherits a non-qualified block of money from their parent or the grandparent, whoever it would be, they might have 40 years to take those RMDs out. So non-qualified stretches are still based on the life expectancy of the beneficiary, where qualified stretches, you have to take all the money out within 10 years. So big difference there. The non-qualified stretches, we have a number of companies that do those. And it's a great way for those clients to, stretch out those gains of those non-qualified accounts. Because we see some non-qualified accounts there that have, $100,000 gains, $200,000 gains. There's some big numbers out there that people need to really look at stretching out based on those needs. So, and who uses these stretch contracts? It's mainly non-spouses. So if you have, a friend that leaves you money, or, if you're the child of an individual that had some sizable qualified dollars or sizable accounts on the non-qualified side with lots of interest earned in those accounts, it's definitely to the client's advantage to stretch those funds out and take out money gradually, as opposed to taking them all out in a lump sum, paying all the taxes now, and then moving forward. Some people may do that based on the tax level they're at, but if you put another $100,000 of income into your tax bracket, you're probably going to be at one of the higher numbers based on what you have to pay out. So definitely something to look at based on that. We do have some really good companies that are in that stretch qualified money side. We see a lot of money going to North American. They have their Choice 8 contract. It's an 8-year plan, and the clients have a very competitive cap rates with that one, very competitive fixed rate. The one thing it does not offer is a bonus. If you'd like to get a bonus kicked into your client, you have your choice amongst two main carriers. The one we see most of these bonus dollars going to is Equitrust. They have a couple of really nice bonus annuities, including the Market 10, which is a 10-year contract, 8% bonus. They also have their Power Bonus annuity, which is a little bit longer contract in some states. It's 14 years in some states, but 10 years in others based on that 10-10 rule. The bonus on that plan is 12%, and Equitrust also is paying an additional 1% commission through the month of June. So a plan that would typically pay a 7% commission is now paying an 8% commission with Equitrust. A really good combination there, based on those funds going in, and I think there'd be an excellent way to go. American Equity also offers stretch qualified opportunities. They're also in the non-qualified market, and so is North American. Mass Mutual Life handles both sides. You can do the Legend 7 right now with Mass Mutual. The thing I like about that product is it has really strong cap rates on the S&P, up in that 8 to 9 to 10% range. They also have a gold index right now with 11% cap. They have a real estate index with also 11% cap. And they also have a very strong fixed rate right in that 4.5% range. I like that plan a lot. It gives you some really good opportunities to make money, in the market and outside the market via gold and via real estate. But very good program. So I did have an individual that came up that's talking about, taking the money up front and, taking the tax hit up front and then having that money go from a qualified to a non-qualified account. That's good and bad. I mean, it really depends on the client's current tax bracket they're in. A lot of times, someone that inherits this money might be in their lower 60s or still working. Maybe they're making $100,000 a year. You add another $100,000 onto that gets them into a higher tax bracket, and they're going to be, pretty much at the max based on, over $200,000 of income, and that can really hammer you based on what your inheritance is going to be worth after you pay those taxes. Whereas if maybe you delayed these for a number of years and you're retired at that point, your income is much lower. You're going to be in a lower tax bracket based on lower income, and then taking out pieces of this is going to keep you in that lower tax bracket. That's where it might be a benefit. I mean, but obviously, some people think taxes are going up. I know that Trump's trying to get taxes lower. So it's a roll the dice. I mean, guaranteed where your tax rates are going to be down the road. They've been pretty consistent in the last number of years. But if your client is currently working and they're already making good money, you don't want to add more income onto that, in a lump sum. I think you'd be much better off by doing, you know, more of a stretch type situation based on that. So some of it obviously depends on the beneficiary's age when they get the monies. But if you have someone in their 80s that passes away, chances are they're going to have children in their upper 50s, lower 60s, still working and having a situation where they need to stretch those dollars out to avoid the big tax hit all at once. So another good company is Silac. They just got into this game on stretch IRAs. I know one thing about Silac, they do require a client to be 65 or younger to do the stretch IRA business. I did have a policy that came in on someone that's above 65. We had to go to another source based on that. But if you do have a situation where the client is 65 or younger, Silac is also a good choice. They've got some nice bonus annuities. You can do a 5-year or 7-year contract with them. They do have bonuses on the 7-year for sure. And if you want to pay for a bonus on the 5-year, you're able to do that. So good opportunity with that situation. Non-qualified stretch contracts are much more limited on companies that do them. I know Lincoln Financial, really good company, got some really good ratings with them. They got some really strong rates right now in their OptiBlend series. You can utilize them for non-stretch or stretch non-qualified accounts. North American, as we mentioned, you can do those. You can also do the another contract with North American. It's a 10-year contract, has a little better rates than their 8-year. But you can utilize that on the non-qualified side. As I mentioned, Mass Mutual is a great way to go with some of the plans they have and some of the benefits that they offer. American Equity, long-standing company, good programs that they have available on the stretch, qualified and non-qualified side. But those are your main 4 carriers for non-qualified stretches. Equitrust does not do them. Most companies do not do non-qualified stretch accounts, but we do have some options out there for you. And as I mentioned, the biggest benefit of doing a non-qualified stretch is you're stretching out those payments for the life expectancy of the beneficiary. So if you have a beneficiary that's 35 years old, their life expectancy is another 50 years. You could stretch these payments out for 50 years if they want to. So really some great benefits based on that. And as I mentioned here, and then the recent stretch IRA developments, we got the 10-year payout based on 2020 and after deaths based on clients. RMD requirements of a client that passed was currently taking RMDs, the beneficiary has to continue that and take RMDs out. One thing about non-qualified stretches, they also have to take RMDs out, typically within a year of the death of the client. So the client passed away this year, by the end of next year, they'll need to take out their RMD, and that goes into play. Whereas on the qualified side, RMDs are required, the next year after the person passes away. So if the client was 75 years old this year, they passed away, they should have taken an RMD out for 2025 based on their age. Then next year, you have to take an RMD out based on the beneficiary age. So instead of taking RMD based on 75, you take it maybe based on 55, based on the beneficiary's age the second year. So do keep that in mind. You do have to have, those RMDs based on those clients' ages, and it's based on the beneficiary's age. Just launching another quick poll. It's our last one. If you have interest in getting some additional details, any company we talked about, I know we see a lot going to Equitrust on the qualified money side. On the non-qualified side, I mean, I've seen a lot of business going to Mass Mutual, a lot going to Lincoln Financial, 2 very highly rated carriers. Some of the recent issues we've had with some of these companies that are maybe a little bit lower rated, And we got people coming out, collateral bankers right now. They're finally getting their money sent out to them. We've seen some recent news on Sentinel and Atlantic Coast where they're possibly in some financial strife. So a lot of people are looking towards higher rated companies, and they want to go with companies that are A rated, A plus rated, A double plus. So that definitely is a benefit by some of these companies we've talked about. So North American's got very high ratings. So does Mass Mutual. American Equities A minus. Equitrust is B double plus. Silac, I believe, is a B. So they'd be the lower on the echelon on ratings, but they do have some good benefits based on some of their plans and some of the index strategies they have, and then what's available through Silac. Very good company. Do a lot of business with them right now. But again, if you do have interest in getting some more details on any companies we talked about on stretch accounts, we're glad to get those done. If you have specific questions on a case maybe you're working on the stretch side, be glad to get that done. And then we do see a lot of spouses inheriting money. That's treated a little bit different. They're basically can assume the policy as is. It would not be a stretch situation, based on their age. They'd be required to start taking out distributions when they turn 73 or older, based on their age. So do keep that in mind. The spouse inherits the funds. They need to start taking money out based on their age. So definitely a little different situation spouses. I know we've seen a number of spouses inheriting qualified funds and inheriting non-qualified accounts, doing spousal assumptions on those, and then transferring those to a different company to maybe earn a bonus or getting better rates. Any policy that was issued 2021 and before has much lower interest rates than they can earn today. So instead of earning 7, 8, 9, 10%, their rates are probably down in the 2 and 3 range. So just by moving that to a newer contract, you're going to triple the amount of money that these clients can make based on where they're at currently in the current product versus what they can make based on new plans. And if you yourself have a block of clients that had issued in 2019 and earlier, 2020 and earlier, you definitely need to check on what may be the better product for them right now based on the much higher interest rate environment we're in. Maybe if they're even taking income out on a lifetime income payment, there's a very good chance you can get that income up based on going to a new contract. Definitely want to price that out and see where that stands. But I do appreciate everyone being on this morning. I will be making contact with everyone that was on today's meeting today and tomorrow. I can send additional information out to you based on what's out there. I know we have North American has a really good piece on both qualified and non-qualified stretches. They've got a really good RMD table in that packet, and you can get really good up-to-date information on what's going on out there in that stretch side of the business. I know I helped an agent out a number of years ago with some stretch non-qualified accounts. Went to Mass Mutual. We've seen really good returns based on those accounts, and I think that will continue based on Mass Mutual's current product line and what they have available out there. But if you do have questions, I'm more than happy to get those answered when I make my calls here today and tomorrow. Otherwise, I do try to keep this at a half an hour or less. So everyone have a great week. Enjoy your Memorial Day weekend coming up, a week from this weekend. Hopefully you have nice temperatures like we have out here in Omaha today. We're mid 70s, kind of cooled off from we've been in the upper 80s the last few days, but very nice conditions today. Otherwise, everyone have a great week, and we'll speak to you soon. Thank you.